Hello and good morning, everyone, to yet another vlog of CMA Final Examination. And a quick time check, guys. Today is 1st of November, and you almost have 1 month to go for your examination. I hope and sincerely hope that your preparations are going really fine. You need to gear up, pull up your socks now. At least 10 hours of study is bare minimum required till the examination. So, the topic which I'm going to discuss today is a very important topic of the subject cost and management account audit. And this topic covers a weightage of about 8 to 10 marks in your examination. And in every second examination, a question from this topic is asked. So, let's start. The topic of today's discussion is profit reconciliation statement. So, when you are doing cost audit of an organization, you have to mandatorily annex an annexure of profit reconciliation or the reconciliation between costing profit and the financial profit. This annexure is to be annexed with the cost audit report which you prepare. So, first of all, let's discuss what are the reasons for difference between costing profits and financial profits. So there are multiple reasons which can lead to a difference in these two profits. One of the reasons can be absence of financial expenses and income in the costing profit. So while you are computing costing profit, your profit does not include financial income. Similarly, it does not include financial expenses like interest expense, like bank guarantee charges, like bank charges, etc. However, while computing the financial profit, you have to include financial incomes as well as financial expenses in your profit. So that can be one of the reasons. The second reason can be under an over absorption of overheads. So in financial accounting, the overheads are absorbed on an accrual basis. However, the costing principles asks you to absorb the overheads on the basis of per unit production. So that can be another reason for difference between costing profits and financial profits. So cost auditor has to mandatorily annex a reconciliation between costing profit and financial profits to its auditor's report. This is the annexure which cost auditor has to annex along with the cost audit report. This annexure is given in your book at page number 47. You can refer to the page number 47 and you will get the format of this annexure. How is this annexure prepared? So, the very first question which arises is, sir, should we start off with the costing profit or the financial profit or either of them? So in Inter, you would have studied that you can either start with costing profit or start with financial profit if both the profits are given in the examination. However, in your final examination, the thing which is to be noted is that if both the profits are given in the question, that is costing profit is also given, financial profit is also given, then you have to necessarily start with the costing profit. Why I am saying so? Because the format has been prescribed by the rules 2014 amended by 2017 and that format has to be strictly followed. So the format says that profit and loss as per the costing records is the starting point of the profit reconciliation statement, and then we are going to adjust the additions and deletions from this costing profit to arrive at the profit and loss as per the financial accounts. So this is the format which we are going to follow while making a profit reconciliation statement. Needless to say that if the question gives you only one profit, either costing or financial, then you don't have any option and you have to take the profit given in the question as the starting point or as the base point. So, yes, you have studied profit reconciliation statement in your inter examination and you must be well versed with the provisions and with the techniques of the basic concept of profit reconciliation. So my effort in this video will be to introduce you to a technique which will reduce your time by 50% in the examination while solving these questions. So let us start with a question. Question number 16. It is given on page number 2.15 of your study notes. Illustration number 16. We are starting with the practical question. Okay, the profit as per financial accounts of XY Cement Limited for the year 2010-11 was 1 crore 34 lakh 27,561. So the question starts off by giving you the financial profit. Profit as per cost accounting records for the same period was more. You are required to prepare a reconciliation statement, arrive at the profit as per the cost accounts. The following details are collected from the financial account schedule and cost accounting records. So we have been given the profit as per the financial accounts, hence we have to necessarily take profit as per the financial accounts as the starting point. We have been given certain adjustments and we are going to prepare a profit reconciliation statement. Let's start. Profit reconciliation statement of XY Cement Limited. We will start off by profits as per the financial accounts because we have not been given the profits as per the cost accounts. This is the amount in rupees, and we will start by taking the profit as per the financial accounts. So the profit as per the financial accounts is 1 crore 34 lakhs 27,561. We'll add certain incomes which have not been considered, and we less some adjustments which will primarily be expenses which have not been considered in financial accounts. So we have to arrive at the figure of profit as per the costing accounts by adding and subtracting certain items, making certain adjustments. The last figure will be the figure of profits as per the cost accounts. That will be our answer. So we have to arrive at our answer of profit as per the cost accounts. In this process, we have to adjust certain items which are given in the question. So let's start. The first item is valuation of stock. We have been given with 4 kind of stocks: opening work in progress, opening finished goods, closing work in progress, closing finished goods. We have been given the amounts as per the financial accounts and amounts as per the cost accounts. So the very first question which we need to answer is whether opening work in progress is in the nature of expense or income. Sir, opening work in progress is a balance sheet item. Why are you asking that whether it is in the nature of expense or income? Please note that opening work in progress also appears in the profit and loss account debit side. So opening work in progress also has a profit angle to it, and the profit angle is debit angle. So if I may say in a layman language, opening work in progress is nothing but expenditure for an organization. So it will be treated as an expenditure for an organization. So opening work in progress is 29,52,315 in financial accounts and 23,45,720 in costing accounts. So expenditure is more in financial accounts. Expenditure is less in costing accounts. Sir, whether to add the difference or reduce the difference. I'll tell you a very simple technique of whether to add the difference or reduce the difference. Put out your both the hands in front of you. Yes, please put out both the hands in front of you and just write C on your left hand. You have to write C on your left hand and you have to write F on your right hand. So C on your left hand and F on your right hand. You have to write it. In your examination hall also you have to write it. C on your left hand, F in your right hand. Now C represents the costing profit, F represents the financial profit. These are the two profits which are represented by two hands. Now let us come back to the transaction. Transaction says opening work in progress, which is the expenditure. Expenditure is more in financial accounts and less in costing accounts. If expenditure is more in financial accounts and less in costing accounts, then my financial profit is less than the costing profit. The situation is like this. Financial profit is less and costing profit is more. If financial profit is less and costing profit is more, then you can do one of the two things. What are those two things? You can increase the financial profit or decrease the costing profit to make them at the equal level. Now sir, which method to choose? Whether to increase the financial profit or to reduce the costing profit? The answer would lie in which profit have you taken as your starting figure in your question. So tell me in your question, what is the starting point? The starting point is financial accounts, financial profits. Then you have to only move your hand which represents your financial profit. You cannot move your hand which represents the costing profit. Had I taken profit as per the cost accounts as the first item, then I would have moved my costing profit hand. So you have to take care the hand which represents your opening profits should be moving and the other hand should remain the constant. So in this case, since we have taken financial accounts as our base, the hand which should move is the financial profit hand. So your right hand will move in this case. Now let's see whether the right hand should move upwards or downwards. Now financial profit is containing expense which is more. So financial profit is less and costing profit is more. So you tell me, what should I do? I should add to the financial profit. So this adjustment will be added to the financial profit to make it equal to the costing profit. So the adjustment will be add under valuation of work in progress in cost books. The amount which should be taken is the difference between the amount which is there in the financial books and costing books, which is 2952315 minus 2345720. So this is the amount which will come over here. Now let us move to the next transaction. Next transaction is opening finished goods. Again, the first question which you need to answer to yourself is opening finished goods is in the nature of expenditure or income. It comes in the debit side of the profit and loss account and hence this is expenditure again. So expenditure is more in costing accounts, is less in financial accounts. Expenditure is more in costing accounts, is less in financial accounts. So if expenditure is more in costing accounts, then costing profit would be less and financial profit would be more. Because expenditure is more in costing accounts, so more expenditure in costing account will lead to a less profit in costing account. So costing profit is less, financial profit is more. Now what should I do? Add or less? Answer is less, because only financial profit can move. This hand can move, this hand cannot move. So I have to do less. So the adjustment will be less overvaluation of opening finished goods in cost books. Amount again will be differential of the two amounts which are given in the question. Next, closing work in progress. So closing work in progress is in the nature of income. Why do I say so? Because closing work in progress appears on the credit side of the profit and loss account. So closing work in progress is in the nature of income. Now let's see what is the amount. Income in financial accounts is more and income in costing accounts is less. So income in financial accounts is more. So naturally profits in financial accounts will be more and profits in costing accounts will be less. So since profits in financial accounts is more, what do I need to do? Add or less? It should be less. Less. Undervaluation of closing work in progress in cost books. The amount will be 4172635 minus 3636345. Let's move on to the last transaction of the valuation of stock category. Last transaction is closing work finished goods. Closing finished goods is also in the nature of income. Now see, income is more in cost accounts. So income is more in cost accounts. Income is less in financial accounts. So the situation is like this, where costing profit is more and financial profit is less. So what do we need to do? Add to the financial profit. We will add the differential to the financial profit. So I'll put the entry in the addition adjustment. The entry will be overvaluation of closing finished goods in cost books. Amount will again be the differential between the amounts which is given in both the books. Differential is 415,24148 minus 367,51400. This is the amount which should come in the reconciliation statement. Please take care that your amounts should not cross this line. Mistakenly, my amounts have crossed this line. Your amount should not cross this line. Okay. So the next category of the reconciliation item is interest income from intercorporate deposits. So there is some financial income which has been received and that income has been recorded in financial account but not in cost accounts. So again, the situation will be financial profit will be more, costing profit will be less, because financial profit would have an element of financial income. So what do we need to do now? Less. Less. Interest income not recorded in cost books. Interest income which we have not recorded in the cost books is amounting to 615,340. Next item will be donations given. There is some donation which is given which has been recognized in the financial accounts. Okay, the amount is not 615,340. The amount is 614,250. So the next entry is donations given. We have given some donations in the financial accounts. We have recognized this amount as an expenditure, but in the costing accounts, we have not recognized this amount as the expenditure. So I have recognized some amount as an expenditure in the financial accounts. So financial accounts will have an expenditure. Costing accounts will not have an expenditure. So financial profit will be less. Costing profit will be more. If financial profit is less and costing profit will be more, then what should I do? Add. So the entry will be donation, not recognized in cost books. I have not recognized a donation in cost books. What is the amount? Amount is 475250. This is the amount of donation which is not recognized in the costing books. Next entry is loss on sale of fixed assets. Again, an expenditure which has been recorded in the financial accounts but not in the cost accounts. So that expenditure has been recorded in the financial accounts, which means financial profit is less. Costing profit is more. What should we do? Add. Loss on sale of assets not recognized in cost books. What is the amount? Amount is 104148. This is the amount of loss which is not recorded in the costing books. It is in the nature of expenditure. Now next item, very important item. Please mark this item. It says value of cement taken for own consumption. There is some cement which has been taken for own consumption. Financial account says that this amount is 3,75,920. Costing book says it is 3,45,200. Now the very first question which arises is whether this is in the nature of expenditure or income. So let us understand what is this transaction. Transaction is cement taken for own consumption, which means that the owners of the company or the proprietor of the company or the board of directors of the company or the shareholders of the company have withdrawn this cement from the business as a part of a personal drawings, and they have used this cement for building their own premises or have some personal use for this cement. They have withdrawn this cement for own consumption. Now let me first tell you what is the entry for drawings. Entry for drawings should be drawings account debit to purchases. This account is a balance sheet account which will go on to reduce the share capital of the business or the share capital of the shareholders. This is a drawings account which is a balance sheet item. This is a profit and loss item. So profit and loss item is of consideration for us because we are creating profit reconciliation statement and we need to know whether this item is an item of expenditure or an item of income. Now tell me, if something is credited to the profit and loss account, what would it be? Of course, income. Anything which is credited to the profit and loss account is always income. Drawings is not a profit and loss account item, it is a balance sheet item. Hence, drawing will affect the balance sheet and not the profit and loss account. Hence, this entire transaction is a transaction which is in the nature of income. Once you have understood that this is in the nature of income, now it will be very easy to decipher what is the treatment of this line item. Line item says value of cement taken for own consumption. This is in the nature of income. We have just understood that this is in the nature of income. Income is more in financial accounts and less in costing accounts. So income is more in financial accounts and less in costing accounts. Please tell me whether the amount should be reduced or added. Of course, reduced. So, value of cement taken for own consumption it will be a difference between value which is appearing in the financial books and value which is appearing in the costing books. 345,200. The entry should be reduced. Now you have to carefully understand why should it be reduced. For that you need to know whether the entry represents an income side or an expenditure side. Once you determine whether the entry denotes an income side or an expenditure side, you will be able to understand whether the entry should be reduced or added. The last item says cost of power drawn from own windmill. There is a electricity board tariff rate which is used for costing books, and there is a cost which is used for financial accounts. So there is the cost which you are incurring in your own windmill. That cost is being recorded in the financial books as a different number and cost books as a different number. Now first of all, please understand one thing. There is a deliberate use of word drawn. But don't confuse this word with drawings. There cannot be a situation where windmill, the electricity generated from windmill, is transferred to the owner's home for personal consumption. There cannot be a situation. So this drawn does not represent drawings. Please don't confuse it with drawings. Drawn means extracted. So cost of power extracted from the own windmill. You are extracting power from your own windmill. You are using your windmill to generate power and using it within your factory of cement. And that extraction is costing you this much amount in cost accounts and this much amount in financial accounts. So it is in the nature of cost or expenditure. So expenditure is more in costing accounts and less in financial accounts. Expenditure is more in costing accounts and less in financial accounts. So financial profit will be more, costing profit will be less. And if financial profit is more, then financial profit should be reduced to make it equal to the costing profits. So the adjustment for the last line item will be less cost of power drawn from own windmill. Again, this will be a difference between amount which appears in the cost books and amount which appears in the financial books. So now what you need to do is you need to insert all the amounts at the relevant places. You need to add and less these amounts and compute the figure of costing profit. This is how you need to do the profit reconciliation statement. Guys, please remember to do all the questions which are given in the study notes. They are very, very important. You need to refer to all the questions which are given over there, and you also have to cover the questions which are which you get from anywhere else, any other source. If you get any question, please do as much practice as possible for this particular topic, because this topic is going to recur in the examination very, 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 very frequently. Hence, this topic is very, very important. And the trick in this topic is to reduce the time which is required you to solve this solve this question. So it is very, very easy to decipher what is the treatment, but save time on that treatment while doing the question in the examination is the trick. So if you follow this trick which I have told you, you will be able to reduce your time by 50% in the examination. Just practice this trick at your home and you will be able to solve these questions very, 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 very smoothly. And that's it for today. And thank you for watching this video. I'll be coming up with the videos of cost accounting standards. I know many of you have requested me to give you videos for the cost accounting standards. I am in the process of preparing those cost accounting standards, and I will be coming up with the short videos soon. Till then, all the best for your examination and happy studying.